Thanks for joining us. You're watching First Business. Well, we've seen the earnings season getting underway in the US. Alcoa reporting, of course, after the bell. Earnings per share coming in line with expectations, 12 cents there. The revenue, definitely a beat for the second quarter, $5.8 billion. The expectation had been that second quarter revenue would come in around $5.66 billion. Let's get some more on what's expected from the earnings season. What else are we watching in that US market? Joining us now is Larry Shover, Chief Investment Officer at SPX Alternatives. Larry, great to see you as always. Yeah, just firstly, coming down to the expectations surrounding earnings, we've seen Alcoa come through there with earnings per share in line, revenue definitely a beat. Just in terms of the importance given to Alcoa, obviously not in the Dow anymore, is it still considered a bellwether?
You know, it's not. I mean, it's exciting to see. It's exciting to see them beat 2 quarters in a row, and especially as much as they did on their cost-cutting efforts. They're able to sell aluminum above the cost curve. It's all wonderful. But I think here in America, we're really focusing a lot more on bank earnings. We have Wells Fargo and Friday. That's the beginning of, you know, the real earnings season. Don't get me wrong. It's exciting. Everybody's happy. But it's not. It's certainly not a bellwether.
Just in terms of the overall earnings season, we've been hearing these expectations are for growth now of about 6.2%. What do you think, given you know, some of the guidance that you've been getting there? What do you think we'll see?
Well, I think we're going to see something close to it, maybe closer to 5.5%. But that said, I do believe, I strongly feel that that 100-point rally we got in the S&Ps from the middle of May till now, or Friday, had a lot to do with those expectations being lifted higher and higher. And also, people are looking at next year already. Earnings per share, the consensus is about $130 per. That would put us at a 15.2 multiple, which is right in line where we probably should be. But it would require an 8.5% growth rate from the S&P 500, and that's going to be a stunning event to watch if that really does play out.
Just got to ask you about that overall market and the moves that we've been seeing. There's another pullback overnight. What do you say? What sort of view are you taking on that run up to 17,000, which seemed to happen quite quickly from mid-May after a real period of stagnation?
Yeah. Yeah, you know, it's just misplaced hysteria. I mean, people are pulling out those old, tired phrases that were overvalued, were overbought, the Fed's going to tighten, and earnings season's going to be bad, et cetera. These are all old phrases. And let's keep in mind that the S&P 500 basically did nothing until May. I mean, it was up maybe 1%. And then we tore 6% in a matter of 7 weeks. So right now, like today and yesterday's trading, very slow, but there's a lot of misplaced hysteria, like the world's ending or something like that. And honestly, it's just a healthy period of digestion and consolidation. Okay.
And I mean, how much sort of further do you think this pullback could have in it?
I'm sorry, how much more
further,
can we see?
Yeah, how much further could it go?
Yeah, you know, I could see us retracing half the move. I'm not much of a technician. I look at more of momentum. Right now, there's so much negativity out there, and it continues to be so, that I think any kind of washout is probably slim to none. I mean, I could definitely see us correcting another % or so. But again, it's just too negative out there, and it's hard to keep this rally down.
Sure. Just wanted to ask you, too, about the economic data. We saw consumers' credit rising in May there. What else have you been watching alongside that pretty stellar, well, on the headline numbers at least, non-farm payrolls report?
Yeah, I think, you know, I'm just encouraged. Auto sales have been good. ISM, PMIs, they've all been very good. Underneath it all, I mean, the only thing that bothers me is like with the jobs number this past week, you know, the participation rate in the U.S., it's still stunningly low. GDP, we're still not able to achieve escape velocity, and our capital spending is still not where it should be. It's still tepid. But we are making baby steps in the right direction, and the last slew of numbers have been very, very good.
Always great to get your analysis. Thank you so much for that, Larry.
Thank you.
Larry Shover there, Chief Investment Officer at SPX Alternatives, joining us from the CME Group in Chicago.